In the next 5 years, AI will not only reshape technology, but redefine leadership, business models, and the very definition of value in financial services. For a truly high-powered discussion, please join me in welcoming our panel for how AI will reshape financial services in the next 5 years. Ladies and gentlemen, give it up for Mr. Daniel Lim, Senior Director, Salesforce Futures, Mr. Rajan Anandan, Managing Director, Peak XV and Surge, Mr. Jeff Walters, MD and Senior Partner, BCG, and Mr. Sudipta Roy, MD and CEO at L&T Finance. And to guide this conversation, we have the brilliant Ms. Avanne Dubash as the moderator. Everybody, give it up for them.
Thank you, gentlemen, for joining in. And, I'd prepared this amazing introduction about how AI is not a buzzword, but we're on a treadmill and we need to catch up. But I think Mr. Sharma has completely unnerved everyone in this audience, and he certainly brought up some very interesting points. And that's exactly what we're going to talk about. The fact that, McKinsey has said that Gen AI alone has the potential to have about $300 billion in global banking. But we need to stop from that treadmill and actually ask how we can put all of this into real-life examples and how we can make it work for our own organizations and ourselves. So let me start off with you, Daniel, and getting your perspective, because you've really seen the world shift when we've spoken about the dot-com bubble and we've moved then to AI. And just while we were chatting a short while ago, you said, this is not a panel that's my forte. I'm interested in the future. So tell us, what does the future hold?
Well, I can't predict the future, but I can definitely share with you some of the aha moments that I've experienced as a futurist. I was at the World Economic Forum in late 2018, and I got a sense to see the early versions of the Transformer AI, Gen AI models. And it blew my mind when I first saw that, and I said, this is really going to change the world, right? And, but more recently, though, that's obviously Gen AI. At Salesforce, we've been innovating on agentic AI, right? Agents able to accomplish tasks on behalf of humans. And when I saw what we have in an agent inside Salesforce called Slackbot, we use Slack, it's one of our products, and a way for collaborating. And this Slackbot, I was able to basically do a summary in preparation for a conversation with L&T Finance. And it took 5 seconds for me to get an entire history of the account, the company, and the specifics of the last meetings that we've had with them. But that's not all. What our AI researchers did and engineers did was started prototyping, adding multiple agents behind the scenes of that Slackbot to say, what if we added a sales agent behind it? What if we added a financial advisor agent behind it that had that expertise around giving you financial advice? And each time an agent was added to it in this multi-agent world, this agent got smarter and smarter around multiple domains. And it was unbelievable when I started seeing this at Salesforce about 3 years ago. And then obviously now we're beginning to see some of that in the wild, and it seems so quaint. But when I saw it about 3-4 years ago, it was amazing.
It absolutely blew your mind. Jeff, would you concur with that? Because many are arguing that AI actually has the potential to drive enhanced revenue generation. What is your take on that? Any real-life examples you'd like to share?
Yeah, it's a great question. And I think we have a bit of a paradox right now, because if you talk to white-collar workers, actually in India and Asia Pacific and around the world, 70% in Asia, right, are using AI in their daily workflows already, right? So it's like we have this huge enthusiasm of goodness, right? Clearly a groundswell of a sense that this is useful for me. But then when you really ask the harder question, and the harder question is, well, how many companies are saying I have actually increased my revenue? How many companies are saying I have changed my competitive position? You get down, it depends on how you measure it, but it's a number well below 50%, right? And so I think, the key that companies are starting to pick up on is the difference of what we would call deploy versus reshape. Deploy is I send a bunch of tools to my people, right? Everyone's got a chatbot window on their desktop and they can do some daily tasks a bit better. That's great, but everyone's going to have that, and does that really change revenue? Not much, right? Really, I think the opportunity, and this is the opportunity in banks, and we see this actually in India already, is how do I take critical workflows and processes in my organization and fundamentally reshape how they are done? Right, so that can mean, I fundamentally rethink my entire customer service approach. I fundamentally rethink my underwriting approach, and our data is showing, actually in the banking sector, the fraction of companies who are getting this right already, right, are already showing an average 30% higher revenue growth. They're showing 1.4x greater margins and a higher TSR as well too. But not that many have yet gotten it right, so we're still in the early days.
Early days, and Rajan, you've gone on the record to say that AI lets you build 10x better products, and if you're not doing that, you need to stop. And while it seems like every company or every startup is definitely rebranding their deck with an AI slide, do you think it's just another funding bubble where valuation chases vocabulary?
Yeah, firstly, I'm glad that I'm not in the 50% of the people who have MBAs. Sharad's already left the room.
Or a bureaucrat,
I'm in the 50% that might have a job, although I'm told agents will soon be better venture capitalists than humans. Look, so I think, well, firstly, there are some really, really interesting AI native startups coming up in India. I'll give just two examples from our portfolio. One is a company called Sarvam. They're building sovereign models for India. They have the model layer, but then they also have an application layer. They have voice agents for things like loan collections, customer support, and they have like an agentic transformation layer. So if you look at Sarvam, for instance, and I'm using like this as an example, because this is not like a retrofit company. It's as native AI as you can get. So for IDFC Bank, 50 lakh loan collection calls a month are done by Sarvam agents. They do it in 11 languages. It's as effective as humans, and it costs 60% less. Okay, so those of you in the rooms that run large, armies of folks doing voice, anything with voice, I think you might be in the 50% that we'll actually need to transfer to a different division. So another company would be a company called OnFinance. OnFinance is a company that actually focuses on agentic AI for compliance for banking, financial services, and insurance companies. And our exchange is actually a customer of theirs. So for instance, if you have an SME IPO DHRP, to review that SME IPO DHRP takes 10 to 14 days for humans. And with OnFinance agents, and this is a pure agentic AI company, this is BSE, by the way, Bombay Stock Exchange, it takes 45 minutes, right? So if you look at, and these are two of, I would say, hundreds of examples already in Indian banking financial services. So the value creation is absolutely real. Now, that being said, what you're also seeing is a lot of, I'd say, first, second generation software product companies, SaaS companies, are actually adding very interesting agentic layers to them, right? And because they're able to dramatically improve performance of what their software can deliver. Now, that being said, look, the reality is much like any cycle like this where you have a transformative technology, there'll be some companies that will have valuations where look back 10 years from now and say they were probably overvalued. There'll be other companies will look back and say they were probably undervalued.
But it's good to know that you've highlighted some of those real-life examples in portfolio companies. Sudipta, let me come to you, because L&T Finance has been using data-led decision-making well before AI actually became mainstream. But when was the moment that you realized that, this is, or the potential of AI has moved beyond a pilot to actually transform the way the company operates?
See, obviously, the search for any solution starts with a problem. And when I joined L&T Finance, and L&T Finance is one of the largest two-wheeler lenders in the country. And in the first review with the team, I asked, what are the check bounce rates? And they nonchalantly told me that it's about 20 to 24%. I said, how much does it take you to correct a single case where a customer has bounced a check? The answer was roughly between 800 to 900 bucks. So here we had a problem, which was a large business, but which was a very credit-aggressive business. And obviously, a solution needed to be found. And I have been a very, very long time believer in alternate data, and trying to enrich the credit bureau data and the other data pools that you have. And one of the things we did early in about October or November 2023 is when we tried to put together in a sort of a test bed a lot of data elements, right? Traditional data, which are called banking data and bureau data, and try to enrich about 4, 5, 6 sets of alternate data. And trying to see if we could build a model using AI, more specifically machine learning tools initially, right? To see whether we could make out a meaningful difference. And we could figure out that that test bed gave us results which were really sort of separating, the good from the bad, like a butter cuts out from a knife, especially by putting the additional flavor of alternate data. Now, we had to build a system at scale. And that is when we got the sort of the confidence that, yes, this will work, that's when we started building those systems at scale, which what we showed earlier today was, and our Chief AI and Data Officer showed it, which was Cyclops, which we built. And our engineers built it in 4 months flat. It's largely a machine learning model tool, but of late we have started using some AI layers also on top of that. But it's at scale, and if you look at machine learning, again, is in the overall subset of AI, yeah, machine learning is a type of AI, and it does not use deep learning, that tool right now. But right now, for example, that machine uses 55 algorithms separately. It has probably decisioned about 1 million files and driven down our bounce rates. I talked about a 22 to 24% rate. Last month, typically in Diwali, volumes go up, right? And you expect that when volumes go up, the credit decisions tend to become a little more worse because you are handling large amount of volumes. Last month, our volumes doubled, but our bounce rates came in at 7.15%. So that's been our journey, right? That's been our journey, and that's where we have been pushing to use these tools, which are completely homemade, built by our engineers. And that's when, the small thought that we had in November 23 is a full-fledged operating system right now written with over 1 million lines of code.
Yeah, the proof really is in the pudding and the kind of numbers that you spoke of. Daniel, let me come to you because the reality is that today dozens of Chinese financial firms are using the cheaper alternative to GPT, and that is DeepSeek, pardon me. How are you viewing this divergence, and do you think that it's only a matter of time before the rest of the world catches up?
I actually think that we're creating a diversity in this ecosystem. We're going to have proprietary models in which we pay for. There'll be open source models out there. There'll be specialized models. There'll be industry-wide models, right? And I think this is a healthy development as every part of the ecosystem that gets built out, as with every other technology. You've seen that diversity, and it's absolutely needed, right? So I think when we first saw the foundation labs and the foundation model come out, the frontier models come out, the monolithic model, I think that era is short-lived. And they will be in place for some time, but over time, you'll see that kind of ecosystem, and it's going to be a rich ecosystem. We'll have small models, models on the edge, in the car, right? So I think we're in this long journey, maybe 0.5 of the first inning, right, in this AI journey.
Would you like to add to that, Jeff? Because, for example, China's Ant Group now trains AI models using Alibaba chips, and that's cutting costs by nearly 20%. India, meanwhile, imports about 90% of the AI hardware. Do you think that India as a country is destined to remain digital consumer while the rest of the world is producing their own AI end-to-end stack?
Well, first, I wouldn't get stressed at exactly where all the countries of origins, particularly at the foundation model layer, right? Because Daniel, as you said well, if you look at any, I would say, AI mature enterprise today, they are using a host of different models for different purposes because different models do different things well. And they architect in a way which says, I don't even know what models I might want to use in 6 months, right? So indeed, there are frontier models that come from highly funded companies, right? We have a set of models increasingly open source from China. The diversity is fantastic. I think, when you think about India, of course, having access to all layers of the stack is important, right? I think, you sit in a special place here where understanding the Chinese stack, understanding the Western stack as well too. Should do both, and I think companies around the world are doing both of those things, and it makes a lot of sense. And I think the real advantage and focus should be, we are just at the early stages of how do you take this technology and how do you fundamentally change knowledge work inside your company, and how do you actually rewire your company to use it, right? Because the advantages that will come to the economy here and to workers here is about how companies fundamentally reimagine themselves. And you have an advantage, right? Because number one, most of your companies are not hundreds of years old, so you don't have this legacy, right? So there's less inertia, and there's an energy around growth today. And that energy around growth can be channeled to say, we're going to find the India-appropriate operating model that can actually use a host of models and a host of tech from different places, maybe in a way that wasn't imagined somewhere else, that works in our market. And that's where I think the energy should be put, and actually there's huge opportunity putting the energy in that place. So I don't get stressed about where my GPUs come from today. We have a bit of a shortage, right? There's a lot of CapEx going into GPUs, a lot of CapEx going into foundation models, right? And I think companies shouldn't be stressed about that right now.
Rajan, let me get in your take, because India is doing its fair bit. We've got the AI universities, there's been the signing of the NVIDIA partnerships, but still, when it comes to the AI readiness infrastructure, we rank about 32nd on the list. What more needs to be done to make India AI ready?
Yeah, I think the first thing to keep in mind is, if you look at the last 30 or 40 years in India, we're never the first, we're never the second, we're usually not the third, fourth, or fifth, but when we get going, in a decade, we're the best. Okay, so I think it's important, since we're in a BFSI forum here, right? In 2015, I looked at the top 100 countries on digital payments. India was not on the list.
What year was it?
2015, 10 years ago, right? You look at it 10 years later, we account for more than 60% of real-time payments. You look at mobile broadband, 8 years ago, we weren't in the top 100 countries on mobile broadband penetration. Today, we're number one in the world, right? So I think it's important to keep in mind that, and this era of AI, which was kicked off with ChatGPT, if you will, call it 3 years ago, right? We're still very early in the innings, and I think it's important to keep that in mind, because the way we will actually leverage AI, apply AI, invent AI is going to be very different. Firstly, at the application layer is where we will really, put a lot of energy. And I can safely say today that at the application layer, AI in India will be won by Indian companies. And that is going to be the first time. And I was at Google for a long time. When I joined Google in 2011, India had 10 million smartphone users, no unicorns, and no broadband. So we couldn't have invented great internet companies, because every day I was at Google, people would ask me like, where's the Google of India? Well, the Google of India couldn't have been born because there was no internet. Okay? Today we have 900 million users. We have 120 unicorns. We have a lot of venture capital. And so at the application layer, and we have also a very important thing, which is the way you win application layer in India is make it free or close to free. And the problem is when you invest 1.4 trillion, you can't really make it free. So that's at the application layer. And the only thing I would say at the model layer is, you're absolutely right, we are behind. But it's important to keep in mind, in India, our goal as a nation is not AGI. If we got to AGI, we'll have 1.4 billion people. That'll be like the 50% of this room, as per Sharad Sharma. And that's a terrible place to be, okay? So the goal for us is, how do we leverage AI to make the lives of 1.4 billion Indians better? Education, healthcare, governance, energy, security, et cetera, et cetera. And to do that, actually, what's very interesting is we don't need trillion parameter models. Over the next year, you will see 20 billion, 100 billion parameter models that are truly world-class coming out of India. And those are the models that we need for the use cases that will impact a billion Indians, right? So even at the model layer, because we won't be able to invest 1.4 trillion or half a trillion or $1 trillion, but we will certainly invest 50, 100, 200, $300 million into 20 billion, 100 billion, maybe 200 billion parameter models. And if we do those well, and we know how to do those, we will actually have the model layer and the application layer, and then that leaves the chip layer. 5 years ago, we had no semiconductor startups in India. I'm talking about design startups. Today, we have 40. And we have 20% of the world's semiconductor designers, right? Now, it took Jensen 30 years to build NVIDIA, so we certainly aren't going to build it in 5 years. But all I can say is, when we get going, we get going.
And we become the best at it, like you said. Absolutely. That deserves an applause. So, Sudipta, if I may come to you as well, do you concur to a great extent that while we may not be the first or the second when we do get to it, we will be one of the best? We have steps being taken by the government, the National Strategy for AI by Niti Aayog, for example. There has been a lot of initiative and CapEx push behind it in India.
I do agree with it. And the fact is that obviously the government has been pushing, we in L&T Group, obviously, we are a large data center business as well. Right, and the fact is that we are also investing from the group to build the sort of the data processing capacity of the country, and partner with large hyperscalers to build the data centers, because energy is also at the core of the compute push. But as Rajan said, the fact is that whether on one part, the startups will do their job. The startups will try to build models and build models with a sufficiently large number of parameters, which specifically with India-focused use cases. But the fact is that one of the focus areas I think as organizations we should be focused on is how we use that. You heard in the morning, Peter Norvig talked about, and that the recent MIT study says that 95% of AI implementations in large organizations are failing. The question is why they're failing. And the fact is that I don't know whether you saw a slide in the presentation by our Chief AI and Data Officer. It actually says that it requires a village to raise AI. It's not only a data science team or a technology team to do AI. It is about the whole organization to start understanding the liberating sort of impact it can have on solutioning, on productivity gain, on financial gain, and start that flywheel of improvement, right? And it's very important to start with small use cases. Especially in L&T Finance, if we talk about our experience, for the last 24 months, we have been pushing this, right? And what we have been telling our teams is that start with small use cases. It's not, do not take big, hairy, audacious goals. Start with small use cases. I'll give you one small use case. When I went for investor meetings, and we are a very large microfinance lender. And people asked me, what is your microfinance group attendance sort of stats? And frankly, we had some number, but those were not reliable numbers. So we threw the problem to the team, right? And the team built a very small solution in a very short possible time, where our guy just takes a photograph of the women. We just image process the photographs, go to their original photographs, map it, and the system automatically goes and maps attendance. It's a small use cases. For example, microloan against property, we trained GenAI to really understand how the living standard is within the house. So a sales guy goes and takes a photograph, and then the tool transcribes what is the living standard and gives a score to it. This score goes in an input to the underwriting engine. Again, very small use cases. So what we have been trying to do is, and now there are hundreds of small use cases within the organization. So it is not only important to build the infra, but also build the culture of using it. Because you might, someone recently told me that the LLM is the fastest depreciating asset in technology history ever, right? You spend billions of dollars, but in exactly 6 to 9 months, it becomes commonplace. But the question is that the infra has been built. That infra has been built to power use cases. And the task of powering use cases are on the millions of corporations that are across the world to understand the power of this and harness it to their benefit. AI is a steam engine. AI is the next industrial revolution, right? It's a steam engine. And this steam engine has to be ridden by people who are need the steam engine to pull their wagons forward, right? And obviously, events like this are sort of designed to instill that.
Absolutely. Wonderful. So a great initiative, and that's exactly what we're discussing. But I want to get to the reality of it when it comes to jobs, and that gets everyone quite perturbed. So Daniel, the fact that even OpenAI is hiring ex-Google bankers to automate entry-level finance jobs, they're saying there's 60 to 80% productivity. How worried should one be?
Well, I think if you think about AI as a tool that will be available to all, right? That means that each human on the planet at some point is going to have their personal AI assistant. Imagine that assistant is helping you think about new opportunities, new businesses, new jobs that we've never thought of, right? In the Salesforce Futures team, we're imagining this world where there's going to be agents talking to agents, right? Each one of us will serve our agent to go talk to the banker that's going to serve me, right? And in that world, we can't even imagine the types of jobs that will come at that point. In the history of time, every innovation, of course, there will be some job displacement. And in fact, I would say they're more like task displacement. The jobs are way more complicated than we think, especially around knowledge jobs. And if you look back in history with steam engine, with railroads, over time, we actually have ended up with way more jobs than we could ever imagine. And one anecdote I'll use is that who thought that having a spreadsheet meant that we're going to end up with more accountants than we had before spreadsheets, right? So if that task or that job creates economic value, the technology will enable that person to deliver it in a much more efficient way. That means lowering the barrier to entry. That means more people can deliver that capability, deliver value. Over time, this is how economic value is created and growth is created. So I'm actually fairly optimistic in the long term.
All right, so that's glass half full. What about you, Jeff? Are you worried, especially when it comes to entry-level jobs, you know, white-collar jobs, the talent pool, or are you saying we'll have our own AI assistant, don't worry?
Well, I think there's maybe 2 or 3 things to think about, right? So first off, you know, I actually think you can look at software engineering as this interesting experiment, right? And in software engineering, and if we look at, you know, how we spend time transforming the engineering function of large tech firms, once you bring new AI tools and ways of working, you can get a 20x productivity lift per person, 20x, not 20%, 20x. So if you're the engineer who's not getting 20x and you're still at 1x, I think you have a problem, right? So, you know, and this is going to then come to different areas. But then if I bring a slightly positive spin and then a question, right? The positive spin is, if you, I mean, everyone here is leaders of different companies, and if you think about how your people spend their time, is every minute of the day, you know, really pushing, I would say, the capabilities of all their team members to the maximum? You know, no matter what function I talk to, I was talking to someone in a marketing function, they said, look, I have great marketers, I don't have an MBA, but they hire some MBAs. They say, I hire MBAs, and they actually spend half their time moving pictures around PowerPoint. And that's not pushing them to their maximum. So actually, indeed, what we, you know, everyone's probably feels a quality talent shortage, and to some extent. We have our great talent doing a bunch of stuff which is not really value added. So I think there's this huge unlock when we get that 20x, we take away the stupid tasks. We also, everyone who has a job probably has 4 to 10 hours a week that they hate doing, right? So if we automate away the 4 hours that they hate, that also helps as well too, right? So, and then we actually get to fully get to the productivity and full potential of the people. But then finally, I think we have an interesting question and a dilemma that's not solved yet, which is, I think everyone here, you know, kind of, you honed your craft in whatever you do by starting at the bottom, and you actually did the tedious work, right? So if you were an accountant, you started moving stuff around Excel all the time, and maybe, you know, you weren't being pushed to the limit of your human potential, but that actually grit work helped you understand the underlying mechanics in a very deep way of the craft that you had, right? If we start to automate, I'd say, a lot of the busy work and the underlying mechanics, I think there's an interesting question, which is, you know, how do we then train the next generation of leaders in those functions? So the way we have to learn, right, is going to be fundamentally different, or we are going to end up with this kind of jobs paradox that we've been talking about.
The way we have to learn is going to be different. So Rajan, for everyone here who's listening, say that there are even entrepreneurs, there are people starting out, the younger generation. They want to hear from you. Do they need to reskill themselves? They're definitely not going to take MBAs now, but what else should they be doing to be prepared for this new onslaught?
Yeah, I think, look, so firstly, I think what you heard, I think, from all 3 panelists is, you know, regardless of what you're doing, right, you have to master the AI tools that are relevant to your profession. And actually, in that context, I think new grads, as long as they are fully, quote-unquote, AI capable, and also, like, you have to be a little smart about, it's sort of like, you know, like, basically what we're going to go through. By the way, I think in the near term, everybody's overestimating all this impact. But in the long term, we are underestimating the impact. It's going to be very real, very serious. It's sort of like the transition to the Industrial Revolution, right? Most of the world used to be farmers, and then now, you know, a very small percentage of the world are farmers. So all these jobs are going to change, and that's sort of what you heard. I think the new grads, if, you know, they have to master the AI tooling, and I think they will. Interestingly, like a lot of coders graduating, right? They're actually native AI coders, right? Like meaning they use Cursor or they use GitHub Copilot, etc. I think the real jobs are at risk are people who've been in the workforce sort of 10 to 25 years, who are resistant or reluctant to use AI. I think that is the real risk. It's that big middle if I can call it that. And actually what we are seeing our startups do are startups that have scaled up that have, you know, call it 500 or 1,000 or 2,000 people. They are making radical changes. If I have an engineering manager that doesn't use Cursor or Claude Code or whatever it is, and is not getting their team to use those tools, engineering manager's gone and the engineers are gone. Right? Because the thing is, that is competitive advantage. That is the basis of competition. So you can't have teams, or the same thing with marketing teams, or sales teams, or compliance teams, or HR teams, or finance teams, right? So actually I do think the new grads, as long as they're tooled up, what I call like your AI tooled up, you're going to be fine. Actually, this is really the folks who've been working for a while, and I think we see this with our founders who are very good. They are moving super fast on just taking action. Either this is the bus, you get on the bus, or you can't get on the bus. And I think with large companies, that's what, you know, I was at McKinsey for a long time, and then I worked for some really big tech companies. That is where leadership really matters. Because you just can't put up with a senior leader who isn't going to get AI tooled up. You don't get AI tooled up, bye-bye, it's time to retire.
Do you agree with that? You don't get AI tooled up, out you go?
Sorry?
If you don't get AI tooled up, it's bye-bye.
To a certain extent, I would agree. Yeah. And that's why we have these events like this, you know, just to raise the quotient. Yeah, but, you know, I do believe that, you know, AI will impact the way we do our jobs profoundly. Small example, you know, we introduced our AI Copilot Helios for SME underwriting. An SME file used to take 6 hours to underwrite, now takes 30 minutes. So this gentleman who has 5.5 hours now at hand can actually do 8 files singly, where he was able to do maybe 2 files a day. Right? So obviously it's a huge productivity gain. So the first thing I would think we will see is that in traditional industries which shift to AI, suddenly you will see huge productivity gains, right? Which obviously will bring down your manpower requirement, right? For the initial part. But I do believe that over a period of time, as complexity of AI systems increase and complexity of sort of data maintenance and data governance tools increase, there will be a requirement of engineers on that side as well as tech workforce on that side. Over a period of time, you know, humanity has always proved that whenever there is a shift or whenever there is what we call quote unquote a revolution, the revolution at the end ends up creating more jobs than it was feared to take away. So we cannot crystal ball glaze the future. You know, we're in the middle of an industrial revolution, but I do hope that 50% of people losing their jobs in the next 5 years, probably it shouldn't come true.
Yeah. We have a quick rapid fire, so I encourage you to be just very crisp, maybe one-word answers. I'll start with you, Daniel. One job that AI will never replace, no matter how powerful it gets.
The customer.
Okay.
You'll always have a customer, and they're actually going to get smarter.
Okay, let's get in your take, Jeff. One job AI will never replace?
The parent and the friend.
Okay, Rajan?
The politician.
The politician. And Sudipta, to you?
Good teacher.
Okay, that's a great one. That's a great one. Complete the sentence. In the year 2030, the smartest person in financial services will be a... Daniel?
Somebody can make meaning out of the world because they're going to make the best bet, right?
Yeah. Jeff?
Someone who's been willing to learn.
Willing to learn.
Yes.
Okay. Rajan?
The agent that's trained on L&T Finance's all of its data.
He's stolen your answer, maybe.
Sorry, I didn't get that question properly.
The smartest person in 2030 in financial services will be?
person who uses AI for every bit of his work.
Okay. And finally, who do you think will win the AI race? Is it going to be banks, NBFCs, big tech, or startups within financial services? Daniel?
I actually think that they're all going to be winners. They're actually going to be new
All gonna
categories
be-
we've never thought
yeah.
of, right? Just like new layers that are abstract
Okay.
technology. Yeah.
Jeff, concur?
It's not a race. So you can't agree with the foundation of the question. Yeah.
Ah, diplomatic. All right. And Rajan?
Look, I think these are all very different. Look, India has 10 80,000 crore plus market cap NBFCs. I mean, they're just going to get bigger and bigger, right? So, yeah,
Are
I
you
tend to
saying
kind of agree.
NBFCs then?
No, I mean, look, the best banks will be extremely successful. The best NBFCs will be extremely successful. Best tech companies are going to be extremely successful. I think the key is to be the best. That's the key in whatever you do, right? Because tech companies are not going to become banks. And similarly, banks should not become tech companies.
Yeah. Sudipta?
So if you're talking about Viksit Bharat by 2047 and you're looking at a credit to GDP ratio of 150%, then you have to have a $45 trillion sort of credit market in 2047, right? That means that all the financial services companies which are there, whether it be banks, NBFCs or fintechs, all of them have to grow 10 times in size in this period. So everyone will be successful.
On that positive note, gentlemen, thank you so very much for joining in and sharing with us your very candid insights on AI in the future. I guess the bottom line is we need to get AI tooled up or it's bye-bye. Thank you so much, gentlemen.
Ladies and gentlemen, give it up for our esteemed panel and our wonderful moderator for that inspiring conversation. Kindly remain on stage as I would like to now invite Ms. Sonia Krishnankutti, Chief Executive, Rural Business Finance, on the stage to felicitate our esteemed panel. Come on, ladies and gentlemen, give it up for the wonderful minds on stage here. You have to give them a big round of applause for good pictures. They're going to smile harder.